The SP 500 and the Nasdaq 100. We had a lot going on today, specifically with the rate hike, and then we had the Fed meeting on the day. I'm going to go over the key notes from this that I'm looking at, the projections that went into this, and ultimately how the market shaped up after this meeting and what's going to be happening going forward. Now, when we get into this, I want to talk about a few things, and I'm going to have to break this down kind of into segments, so bear with me. Now, the first thing I do want to mention is the overall plan of what we've been talking about here. Now, every Sunday, if you don't know, I do post a video about the broad viewpoint of the market. I know this is pretty messy, but I try to keep the notes there so we can adjust them together when we show up every Sunday. But I don't usually go over this, but I do want to highlight we got the 50-point December. This should not be January. I'm so sorry. This should actually be Feb. So I do want that to be there. Sorry, it's really ugly. I'll clean it up for the next one. But I do still expect a 25-point hike in February, and that's my overall plan. Right now, we're at 4.5, and after the 25-point hike, if we get that in February, we'll be sitting at 4.75. So this is still going accordingly. Now, what I do want to talk about specifically with this and what's happening going forward are some key bullet points about inflation and really going deeper into unemployment, because if there was one part of this meeting that wasn't necessarily quote unquote bullish, it would have definitely been the side of unemployment. And if we look really quick, and I'm going to zoom in as quickly as possible. If you look, this is their economic projections, and they release basically two major things, a small paragraph of their viewpoint of the market, and they release all their projections. Now, going into 2023, they said they expect unemployment to possibly hit 4.6, right? That's where they want it to rise to, which is about 1% to the upside, which isn't really terrible. I do want to highlight that. Like, if that's as high as we get, and they say 2024, 4.6, and then 2025, 4.5, but really they kind of adjusted those down, and I don't want to go into too much about 2024 and 2025. I want to focus on at least just what's in front of us. So they're saying that they want it to get up, and they really want this to happen because it will get the demand side down also. But this is where they want it to go. And we're sitting at 3.7 currently. Now, let's talk a little bit about what's expected and what this means for the economy. Now, I do want to say one thing before we go further at all. If you're looking at what the Fed's saying specifically about energy and specifically about unemployment, they have no real idea what's happening here. I want that to be known, because really quick, if you go further down here, you can see where they had their revision down here. One sec, let me zoom in down here really quick for you. Their margin of error here is a full point. So basically they're saying you could go up a full percent unemployment, or you could go down. I'm just like, guys, what are y'all talking about? Y'all are crazy. So if we look at this is their margin of error that they're kind of pricing into that. It's really just shows that with unemployment, it's really just up in the air. And so I want to highlight that specifically before I go any further, because I don't want to seem, too bullish or too bearish in either way. But I do want to say unemployment is the main thing we need to be watching for, because we're already getting PPI, CPI, and PCE kind of dropping, right? Those are the important things to look at. Now, I do want to say right now also that they did have some revisions for PCE, which is what they say is the biggest pull of inflation, right? They did revise that to the upside going into 2023. So that was also some bearish news there. But besides that, this is the thing that we need to be looking at. And unemployment. I want to say right now that the thesis here, in my opinion, that I will say is not as concerning for me, is the fact that unemployment, they don't have it really rising too extensively in 2024, 2025, right? They're just like, look, as long as it just gets up a little bit, gets demand down, we're good. And they even said that during this session, or during this quote unquote pullback that we're in, and they even kind of used the word recession, they did say that we don't have to get unemployment to rise to any extensive levels. I want that to be known, okay? So unemployment doesn't have to spike. It doesn't have to go to 5%. And some people thought maybe even possibly 6%. But you don't have that happen. And that was a good point that they made today. Now, when we go a little bit further here, I do want to highlight some stuff that was said. They also said there will not be any rate cuts in 2023, which we already knew. I kind of went over that a lot, but I just wanted, they said it in stone. They also raised the Fed median view of fund rates to 5.1%, up from 4.6%, which obviously we knew they weren't going to stop raising rates in 2023. I guess they just have to raise this every single time they go into. So I want to get all the bear stuff out of the way, right? Okay, now that we got that out of the way, and as we start to look at the charts, I do want to say this right now. They did say, and again, I Powell says a few crazy things, so bear with me. He did say a soft landing is still on the table, which I'm like, pal, come on, man. Like, what? What are we talking about? He said a lot of contradicting stuff, but for the most part, there wasn't that much hawkishness from the Fed. I'm going to tell you that right now. It wasn't that bad. Now, when we get in here a little bit deeper, as far as charts, let's talk about what happened. All day long, we kind of trended up. And I told you, if we looked at yesterday, if we looked at option contracts specifically, it was a lot of taking profits, okay? And a lot of selling on stocks. It wasn't necessarily shorting yesterday. It was a lot of selling and taking profits before the Fed meeting. And I just want to give you a visual. If you went long, basically at 3,900 all the way up to 4,100, you made a pretty big bag because it was almost a straight line. The volatility was great. So you made your money. So it makes sense we saw that profit taking. And it made sense going into today that we saw volume pushing us to the upside. Also made sense. Now, with the immediate sell-off, we saw a little bit of that. And then going from the Fed meeting, it kind of got a little bit of a bounce. Now, the biggest points here, again, nothing's changed from the technical standpoint. We need a mount 4,100 to really be bullish and to get any type of bigger bounce. But right now, you're still below the 200 moving average. And I'm going to continue to say this. As long as you remain below the 200 moving average and you cannot mount that level and hold that level with respect, at least like on a daily time frame, you have to be expecting either a range-bound trading session or downside, okay? You have to expect that. Because food for thought, as I bring this up, just look, this is the 100 daily, this is the 100 MA on the daily, right? I want to make sure you can see that, the green line. And I'm going to go back just a little bit further on the 1 hour time frame so you can see. And the dotted line is at 200. As you can see, you have been range trading in this for roughly a month, okay? Between the 100 and the 200. You've had a few wicks up, but you come right back down. So I want you to understand that the market is consolidating, is pinching, it's kind of basing at this range, which isn't necessarily bad, okay? It's not necessarily the worst. You're making higher highs here also on ES, that's worth mentioning. So that isn't necessarily the worst thing. But the big point here is you got to make a decision soon. If you start to lose the 100 moving average here, I'd be a little bit concerned also. But right now, again, the focal point of trading for everyone out there looking right now, I don't think you're necessarily that bad off or that bearish from that Fed meeting. I'm going to tell you that right now. I still think going into, February, 0.25 rate hikes going forward. I think they're saving some gas in the tank if they need to. And that's just what I think right now. They talked and they, Powell went further on about the possibilities of slowing down and why he thinks it's important and why he thinks that rates don't need to go too much higher, right? He said he's going to leave some gas in the tank in case, a surprise has happened with energy or anything like that. And he vaguely mentioned energy, but I do want that to be said. So going forward, I don't believe this meeting was too terrible. What the bad news from this is that there will be no rate cuts, which I don't think anyone expected because Powell said that so much already, and it really was already priced in. Everything that was bad that was said that could have been taken as bad is somewhat already priced in. It was nothing new. The only good news that came out was that they were going to slow down on rates, that overall they think things are going well with the core inflation as far as CPI and PPI. Those are dropping, but they're not at the levels they want to see yet. They need to see it really start dropping before they consider cutting, which they pretty much said nothing is even on the table for cutting until 2023, right? Because that's how long it's going to take to even get it down. So that's the good news here. That's my opinion, and that's what I view happening. So going forward, again, what you want to see on ES is a hold above the 200 moving average. That's the main bullet point, people. If you're looking at indexes, that's what you want to see. Going over to Nasdaq, a little bit more clear. You don't have your 200 here. You're below your 100 also. You need to get your 200s at 12.4. So I think that's a total possibility. If ES starts pushing up, this is going to be your target here on Nasdaq. I just have to highlight that. But right now, your short-term target, you need to get above and you need to hold 11.8. We were seeing really good behavior before the Fed meeting. We saw that nice sideways basing and higher lows being established here on the Nasdaq, and that was really good to see. Now, the volatility did drop you down, got a little bit of push up, but so far, you're being held up. Sellers have tried to push you below 398, 399, and they can't do it. That is the good news that's out there right now. You're holding at these levels, and right now SPY's at 400. So I don't want to make any crystal ball projections and tell you that you're going to go to the moon or you're going to start flying up tomorrow, but I will say right now, I think there's a better possibility of upside in the short term, 1 to 2 weeks, than there is for downside in the next 1 to 2 weeks. Okay, this is a short-term viewpoint. Long-term viewpoint, I'm not going to go over that today. I go over that on Sundays. I make that really clear. That's when I go over long-term viewpoint. So that's my viewpoint there, and that's what I'm looking at. So I want to be really clear about what's happening here. Don't want to go too much further into this, but that's where my mind is right now. Looking at VIX, I also want to go over what's happening here. And this is a shorter time frame, just go over the past basically 3-4 days to show you what's happening here. I've had a lot of people say, Tyler, VIX was spiking this week. It's doing X, Y, and Z. Now, look, you need to stop looking at VIX from a viewpoint of VIX. If VIX goes up, that means the market's going down. Now, sometimes that does take place because VIX is a measure of derivatives on the SPY and SP 500. That being said, you saw a very big increase in puts, and then today you saw options starting getting taken off the board, right? So this is worth mentioning. Even with the drop that you're having, VIX is still going down. In my opinion, I still think this measures out for the possibility of upside on the market, right? These are all things that I'm looking at. So you saw this massive upside move on VIX. I mean, massive, about $4, and then you just collapsed and gave it all back, even though you had downside of the market. In retrospect, I would have imagined if sellers were trying to really push this and really get aggressive, VIX would have continued to the upside, especially in the derivatives market. I want to highlight that, okay? Going a little bit deeper, when we start to look at what's happening with TLT. I think TLT has been a great indicator of the entire market. Now, I will mention, if you can after hours, there's a little bit of a sell-off. But if we look here, and I want to go specifically so you can see this range that you're in, and we're going to go to the 4-hour really quick. And I want to use longer time frames when we're looking specifically here. As you saw that you pushed and broke the overall trend, you came down, and even today, you had a lot of upside. I'm going to highlight that. You had upside on TLT despite the markets pulling back. And TLT really represents the health of the economy or the overall market structure, if you will. Now you can see if you zoom out and you really look here, TLT's been on basically a almost 2 full year downtrend since December, which marks out what's happening with NQ and ES, right? I want to make that really clear. If you look at NQ, we look at ES on large time frames here. What's happening, right? It's very, very clear. We can go to the daily, zoom out. There's nothing hidden about this. You're still in the downtrend. We look at ES. What's happening here? Trying to break out of the downtrend, but you're still there. Now we look at Dow. Obviously, Dow is probably the strongest of the strong. It's definitely broken out of this little downtrend. But I do want to say TLT possibly leading the pack here. This is very interesting and definitely has to have your attention here because you're finally breaking something and getting a little bit of a glimpse of hope. Going a little bit deeper, I've mentioned what's happening with yields. You've continued to see the 10-year, the 30-year drop. You've really started to see those drop, and a lot of people are pointing to the factor and saying, is this a possibility that you're seeing the market show some strength, show some love on the market here? You're seeing that inversion. You're pushed back down from a full inversion on the 10-year over the 30-year. Some volatility here also. It's interesting that these are going opposite to the way the market's moving. SPY and Nasdaq getting hit today, but the big signals as far as what's happening with TLT and yields, those are dropping, which are typically some bullish indicators there. So I do want to highlight that. I'm not saying you have to skyrocket or anything crazy like that. The only position that I'm still trading is my Home Depot. I'm very clear about that. I haven't established anything else. It's not a signal. You need to do your own financial due diligence. When it comes to anything, speak to a financial advisor if you need to make those decisions for yourself. But I'm going to tell you, I'm not one. This is just my opinion on how the market's moving, okay? So as we dive a little deeper, I just want to make sure y'all know that. And I also do want to highlight for anyone that was even remotely involved in what happened with Home Depot, or you've been looking at Home Depot, I want to show you the opportunity that was there. Even on a long dated contract, as we get in here, I just want to highlight. So yesterday, I started getting into this position around, where is it at? Right here, 2.75. Ended up dropping down to 2.65 instantly, so people got a better entry. Today, where'd they go to? All the way to 3.7. Almost a 40% pop in 1 day of trading. So me personally, I was almost basically size for zero in this trade. So I do want to highlight that. But a lot of people made a good chunk of change here as far as managing your own risk. You can't compare your risk to my risk. We're totally different, right? So I want that to be expressed. And I think Home Depot has real big potential. So I want that to be known on the market. I don't want to spend too much time looking at other stocks or anything like that. But right now, I think if you're looking at this market, you can't be too upset with the result of what happened today. As we look at Qs also, you're still getting rejected from this 290 range. Nothing's really changed, right? If anything, I would have suspected if today was really bad, that we would have pushed out of this range to the downside. The fact that we're even holding sideways is still good news in my opinion, right? If you look at the past month, You've been in a clear-cut sideways range since November 10th. Sideways, 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 sideways. The market, in my opinion, this isn't bad. And again, I'm trying not to be biased. I'm trying to give you my honest viewpoint, but you're still where you were a month ago, right? So this needs to be expressed, right? But the biggest things before you even jump to conclusions of going long or being just extremely bullish, I think the number one sign has got to be this and this alone. I'm going to be very, very clear about this. The number one sign, you're going to hear me repeat the same thing over and over and over here. But you need to get above that 200 moving average on the daily. The simple moving average on the daily, it's about 40.35. If you mount that, I believe you have room up to 42.50 on ES, almost 12.4 on Nasdaq. That's my opinion. That's how I'm looking at the market, and that's how I took it today. If you have questions, ask down below. I'll try to give you my best unbiased viewpoint going into it. I'm open to criticism as well. So leave it down below. I'll see you tomorrow, traders.